today we're going to end, inshallah, LO1. It states 1M1 first, the merit part. It says assess the needs of stakeholders in relation to management and financial accounting information in a specific organization. Whenever the command verb assess comes, it means you have to work on the explanations from the indicative content points, and then you need to provide the judgments. And if at the end, done with the answers, you can add the contra arguments against those judgments. The question is about the needs of stakeholders, that is the necessity. We have two types, internal and external. All the list is there in your indicative content. You just need to pick any small, medium enterprise of your choice, industry, and of any country, which must be authentic and real one, and then you can do this question. It says like how and what actually the question is asked. Identify all the internal and external stakeholders of a specific business. Then for each stakeholder group, explain what type of management or financial accounting information they need to make decisions. Got it? This is what actually is the breakdown of the assessment criteria, 1M1. Focuses on what? Show that different stakeholders need different types of information. It says who needs what information and why. This is the whole summary of the question asked. Now, stakeholders are the individuals or the groups that have an interest in the performance and activities of a business, like consumers, shareholders, employees, managers, frontline managers, head of the department. Anyone who has the stake and interest in the organization is going to be quite keen to know what's the financial and management status of that organization. For a company like Apple, now for this lecture, this is not what the requirement was. We have to use SME, but I accidentally added the example of a multinational. Apple Incorporated organization, stakeholders range from shareholders and employees to customers and government bodies. All these are stakeholders. Each stakeholder group has a specific needs for the management and financial accounting information to make informed decisions. Obviously, everyone has their own choices. Internal stakeholders, now these are the individuals or the groups within an organization who have a direct interest or influence in the company's operations and performance, who is directly keen towards your company to know each and everything. They're directly involved in the organization's activities and decision-making process. They actively take part in each and everyday processes too. However, the external stakeholders, these are the individuals or the groups outside of an organization who have an interest or influence in the company's operation and performance. What's going on with the health, regardless of project, profit, retained earnings. They are not directly involved in the day-to-day activities of the organization, but are affected by its actions. So whatever the actions, decisions are taken by the internal management and stakeholders, it is going to affect the externals too. Now, the internal stakeholders are directly involved in the organization and have a vested interest in its success, whereas external stakeholders are indirectly affected by the organization's actions and have varying levels of influence over its operations, depending on the amount, the category of the investment you have done in the organization. Recognizing and addressing the needs of these stakeholders can lead to better decision-making, improved relationships, and enhanced overall performance. This is for both the categories of stakeholders. When you pour good stuff into it, they're going to give you nice out. Internal stakeholders. The first one is the shareholders. In the same way, you are going to categorize in your assignment solutions too. Under the heading of internal stakeholder, the first one is the shareholders. What are their needs? They require financial statements, that is income, balance sheet, and everything, to assess the profitability and financial health of the Apple organization. They look at annual reports, income statements, balance sheets, and cash flow statements to evaluate the company's performance and decide on the continuation or the modification of their investment, whether to invest in the company existing one or not, or to withdraw. For example, Apple shareholders closely monitor the quarterly earnings, that is after every 4 months, what's the status, reports to track revenue growth from the new product launches and services. Soon, 17 is going to be launched and the hype is already up in the market. Then comes under the heading of internal stakeholders, directors and managers' needs. The directors and the managers need detailed management accounting information to make strategic and operational decisions. This includes budgets, variance reports, and cost analysis. Again, the categories of the information which is required by which kind of stakeholder, director, and managers. For example, Apple's management uses cost-benefit analysis, and the variance reports to optimize production processes and manage the research and development investments. Then comes the employee needs, that is, the people who work in the organization. For us, employees are interested in the financial stability and profitability of the company as it impacts job security and compensation. Because if you're not reluctant towards the status of the company, soon maybe if there is a problem, natural calamity, you can be redundant, they can withdraw you, they can fire you. So you need to know that what actually is going on in it. They also benefit from the management accounting information related to the performance incentives and productivity measures, that is known as the fringe benefits, which we do get when we are in a good reputative organization like vacations, free petrol, gym, discount on different food, restaurants, like that. For example, Apple's employees may look at the internal performance metrics to understand how their roles contribute to the overall success of the company. That is what they are actually contributing to the company and return what the company is giving to them. Then comes the category of the external stakeholders. We have the first one, suppliers. Now, these require information about the Apple's financial stability and payment practices, as the relationship of supplier and producer is quite critical. We have a relation of credit purchases. First, we take the raw material from the suppliers. Once we enjoy the amenity, and then we pay them after 60 to 90 days, according to the contract. They look at the credit worthiness and payment histories to decide on terms of business whether this business XYZ Apple is paying the suppliers by the time or not. For example, suppliers review the Apple's financial statements to ensure the companies can meet payment obligations and maintain a long-term business relationship. Like if the liabilities are quite high, this means the organization is not liquidate enough. So it's better not to be a supplier of that company. Then comes customers. Customers are interested in the product quality and reliability, which can be directly gauged through the company's financial performance and investment in the research and development. Because the main crux is what? First, after the profit, is to entertain the consumers at maximum, providing them with a qualitative product with a good quantity and everything, and the prices too. For example, customers might look at the Apple's annual research and development expenditures and financial reports to gauge the company's commitment to innovation, whether they are coming up with the new stuff, they are working on the corrections, improvements which the consumers tell them, and then they come with a better version. All these things matters a lot. Lenders need to detail the financial information to assess the credit risk associated with the lending to them. Lending, you have an idea of what lenders are?
Yes.
Lend something, yeah? It is that. They examine the company's debt levels, that is, when they are paying to the people, how much money they have. The amount of money coming into the business must be high as compared to going outside, and profitability ratios too. For example, banks and other financial institutions analyze Apple's debt to equity ratio, in which we consider that the debt must be less and equity, that is, the capital must be high, and interest coverage ratio, because before approving the large loans. Interest coverage, that is, when you are taking the loan from an XYZ entity, branch, any firm, or microfinance bank, on what interest payments you are covering those loans. That is also important. Government. Now, these bodies require financial information for the tax purposes and regulatory compliance, just to know that whether the business is complying with all the regulations or not. They need accurate financial records to ensure Apple is paying the correct amount of taxes and adhering to the financial regulations. There are so many people who are not earning according to the tax evasion. They're doing tax evasion in a sense, not paying in the time and scrambling up the money. And in the end, what happens? The FIA, they take very strict actions. The IRS interest rate a payment-based reviews Apple's financial statement and tax filings to ensure the compliance with the tax laws. That is why these organizations, even the big or the small one, they have their personal auditors. Analyst needs the requirement. Under the category of external stakeholder, financial analysts need comprehensive financial data to provide investment advice, whether to invest in project A, B, C, or D. They analyze financial trends, performance metrics, and economic indicators. Now, they do with this their parallel organizations and their rivals too. Financial trends, what's going on in the moment in the market, in the industry. Performance metrics, we compare our company with the other company. Economic indicators include the inflation, the interest rate, the employment, the unemployment, these factors: fiscal policy, monetary policy, taxes, subsidies, grants, and so on. Local community, the local community is interested in the company's economic impact. That is, we all want good. That is, inflation must be less and the employment factor should be always up, and interest should be balanced, interest payments, including job creation and environmental practices. And the most important factor I forgot about, sustainability factor, greener environment. For example, community leaders might review Apple's corporate social responsibility CSR reports to understand the company's environmental initiatives and community engagement. You're making your suppliers happy, consumers happy, you're earning great profit, but what about the environment? That too has a right on you. Now comes the benefits of integrated accounting systems in the Apple organization. This 2 point was in your indicative content at the end. Under this, we have first thing, efficiency. Now, integrated means to amalgamate, join together. Accounting systems streamline data collection from and the reporting processes, reducing the redundancies and errors. When you work correctly, you're working with all aspects. What happens? The chances of error, it reduces, and it's a good thing for us. For example, Apple uses of the integrated financial system allows for the real-time financial monitoring, improving the speed and accuracy of the financial reporting, because this finance department, trust me, it's really critical. Even one digit can flop the whole project or the documentation. That is why we need to be very much clear and obedient that what we are doing and what we are writing. Productivity. These systems enhance productivity by automating the routine tasks, allowing the employees to focus on more strategic activities in which we can make sure that the company is growing. It will be in the growth stage. For example, Apple's finance team can spend more time on financial analysis and strategic planning rather than manual data entry and reconciliation. It's a better option if you work on the strategic decisions and saving options and working on the manual data by the hands, by the pen, and by recording everything on the register. Everything should be systemized and automated. Decision making. Integrated system provides a comprehensive view of financial data, supporting better informed decision making. What it means, that is, when you are going to be work as a team under the good leadership, then definitely the decision making game is going to be quite stronger, and it's a good thing for the businesses. For example, Apple's management can assess consolidated financial reports to make strategic decisions about the market expansion or the new product development. And what do you think, that without any homework, without any research, we launch a product? No, we have to do proper research. The cost is decided, the amalgamation is decided, everything is decided. And there are examples as well. Exist that many organizations, the small ones, the newbies, they don't do the proper research and end up doing failures, and they get kicked out of the market. They don't penetrate into it further. Conclusion, understanding the needs of the various stakeholders is crucial for the Apple organization incorporated company to provide relevant and timely financial and management accounting information. The both factors. By integrating accounting systems, Apple can enhance efficiency, productivity and decision-making processes, ultimately benefiting all the stakeholder groups. Because at the end, when you integrate all the benefits, you are benefiting both the subtypes, that is internal stakeholders and external stakeholders. So that is it for 1M1. Is it clear? I even added an explanation that what actually the question is asking us about. Still, if there is a confusion in one merit, one part, do let me know.
Yeah, it's clear, Miss.
Okay. Yeah, just a summary. These were the points from your indicative content. That is the stakeholders. We studied about shareholders and investors first. They need profit, they need growth, they need dividend and risk information. Whereas directors and managers, they need detailed budget, cost analysis, forecast for decision making. Employees they want job security, salary updates, and company performance. Suppliers, they need the payment schedules and purchase volumes. Customer, they want stable prices, qualitative product, and reliability. Lenders, they need repayment ability and cash flow data, more inflow, less outflow. Government wants tax compliance, legal reporting, and the analysts in the community at this point, they need sustainability, corporate social responsibility, and impact reports. This was just a crux of what stakeholders we did today. Last part for LO1, and after this, I think this week we do have a class for this course. We are going to do, inshallah, task 1. Evaluate the benefits of integrating financial and management accounting for a specific business organization system. Again, you need to work on the command verb description. It's really important. Evaluate means to work on whatever the point is given in the indicative content. Pick one first, then explain it. That is, in one paragraph, definition, the explanation required. Then add strength and weaknesses. Do this process with all the points which are mentioned in the indicative content, explanation, strength and weaknesses. Then collectively add similarities and differences. Then comes the judgment and conclusion. That is how you attend the command verb evaluate. The question is about the good points, the benefits which we have when we integrate both the systems together, and we need to relate it with a specific organization. Again, the condition is small, medium enterprise of any country or industry of your choice. The question is asking us that using the same business from 1M1, that is, this is the continuation of one merit, one part, now one distinction one, explaining how having an integrated system, that is where financial accounting and management accounting data are linked in one. We're using both of the systems, accounting systems together, side by side, benefits the company. What are the benefits? Focus go beyond just listing the benefits, explain why those benefits matter for efficiency, productivity, and decision making. What's the necessity behind? Why combining both accounting systems help the business and how? This is the question, and this is what it's asking. Integrating financial and management accounting systems can provide significant benefits to organizations, particularly in the retail sector where H&M operates. Again, this is not an SME, it's a multinational. Financial accounting focuses on providing historical financial information to external stakeholders. So financial accounting mostly helps external stakeholders, while the management accounting provides detailed information to assist in decision making. Again, this is used by both internal and external stakeholders. By integrating these two systems, H&M can achieve improvements in efficiency, productivity, and decision making. When you work on both the systems accurately, perfectly, ultimately we can improve the other factors which hinder the decisions. Okay, then comes yes, efficiency. Efficiency is good. You're trying to meet the deadline earlier. You're trying to be more cunning. You are trying to be punctual. You really want that we should use less resources and produce more. That is what efficiency is. The first strength is streamlined processes. Integrating helps the eliminating the redundant data entry and reduces the chances of errors. Financial data can be automatically synchronized across the systems, ensuring the consistency and accuracy. Why? Because the nature of financial system is like this. We can scrutinize the data, it can be applied anywhere. For example, H&M can reduce the time spent on reconciling financial statements by automating the transfer of sales data from its points of sale, that is POS, system directly into its financial accounting system. Because it's like a mere wastage of time that you're reporting one department, then the second department, and then the things are sorted out. It's better to do everything directly through the system, automated system, applications, softwares, real-time reporting. Integrated systems enable, integrated again means we're using both financial and management together, enables real-time reporting and analysis, allowing H&M to monitor the financial performance and make timely decisions. If you think like that there's an urgency to take the decision, you have to take it, then we can once we have the proper reports and everything, documentation. For example, by integrating its inventory management, that is all the levels stocked up in the warehouses, with financial accounting, H&M can immediately update its financial records when inventory levels change, helping to maintain optimal stock levels and reducing the holding cost. We should not have lots of warehouse, material in the warehouse and not less. It should be balanced at all pace. Weaknesses, however, is implementation cost. The cost to implement the decisions and the software is quite high. The initial cost of implementing an integrated accounting system can be high, including software, training, and possible disruptions during the transition period. Because when you work on both the systems, financial accounting system and management, it is not like just about money. How you're executing things, what sort of decisions we are going to take, how things are going to be, all those questions matter. For example, H&M might face substantial upfront costs and require significant time and resources to train employees on the new integrated system. Obviously, not everyone is familiar with all sorts of softwares and IT things. We need training, we need time, and then things can get easier for us. Then comes complexity. Integrated systems can be complex to manage, requiring ongoing maintenance and updates to ensure they function correctly. That is there a malfunction going on? Is there a glitch? If yes, you can recover it as soon as possible. For example, H&M needs to ensure continuous IT support, information technology support to manage and troubleshoot any issues that arise with the integrated system because it disrupts the whole system of the organization if there is a bug or there is a problem when we are operating both the systems together. Then comes the productivity. The plus point for the productivity is the first thing is strength, enhanced employee productivity. How we do this? With integrated systems, employees can access all the necessary financial and management data from a single platform, saving time and reducing the administrative burden. How H&M it gets easy, like for them, how it's easy because things are stored in a system at one place. For example, H&M's finance team can quickly generate comprehensive financial reports without needing to compile data from the multiple sources, allowing them to focus on more strategic tasks because this is the responsibility of the finance department to make these statements. And whenever you require it, you just order them and they're going to like literally send it to you or present it to in front of you and you need to see that what's the status. Improved collaboration. Integrating fosters a better collaboration between the departments, that is marketing, finance, HR, R&D, production department, as the data is easily accessible and shared across the organization. Now, this is only happened through a system called customer relationship management. It's a CRM system which is installed in the businesses organization, and all the departments are connected to that CRM system. There you can access the laptops, you can access what they are up to, what the decisions we're going to soon take. Like all the details are there and it helps and saves time. Rather, you go to one department, then to another, and you just move day by day. For example, H&M's marketing and finance teams can work together more effectively by using the integrated data to analyze the financial impact of marketing campaigns. Now, both of the departments are different, as in marketing and finance. But because they want to run the advertisements and the campaigns and the billboards, they are using the information quite easily. Weaknesses for the productivity is training requirement. Yes, is it productivity? Yes. Training requirement. Employees may need extensive training to effectively use the integrated system, both the systems together, which can temporarily reduce the productivity because you are new to this. Not everyone is bound to learn those things in your A or university time. You need to train the new employees, even the existing one. H&M must invest in training programs to ensure all the relevant employees are proficient in using the new system, which might lead to initial productivity dip. Yes, it will cause a minor dip reduction in the sales and productivity, which we are doing at the moment. But once you are getting the training, you are trained, the loss which you are doing is going to be fulfilled. Decision making. If you remember the not the task, the bullet distinction part is comprised on 3 points. First was, I think, efficiency, then productivity, and decision making. Now, for the decision making, these are the informed decision making is all about that is you're informing all the colleagues, the departments together. Integrated systems provide comprehensive and accurate data, enabling the better analysis and more informed decision making. What it means when you work together, you are sharing the thoughts and ideas, you are brainstorming, and things get easier for us to take the steps further. For example, H&M's management can use integrated financial and sales data to identify the trends, forecast the future performance, and make the strategic decisions about the new store openings or product lines and how you're able to, see that the new branches are opening day by day in many of the states of the world because they're doing the decision making, they're discussing the stuff. Enhanced strategic planning. Access to real-time data supports the strategic planning and long-term goal setting. That is, what is the reality, what's going on in the world at the moment, and then you take decisions accordingly. For example, H&M can use integrated data to plan the global expansion strategy. Like first you're a sole trader, then a partnership, then you come the private limited company, and then a public, and that is what a multinational is. So step by step, you grow. And it's only possible when you're united, you're taking all the consideration steps together. The financial performance, market trends, and operational efficiency. Innovation is the key. Creativity is the box. The weakness for the decision making was data overload. The abundance of the data from the integrated systems can be overwhelming, making it challenging to extract actionable insight because most of the ideas they literally confuse us as well because we're not able to take one decision then. For example, H&M's managers might struggle to identify the key performance indicators amid vast amounts of integrated data, necessitating that is making it necessary advanced data analytic tools. Now, not everyone is scared about it. You need to have information, then you need a little bit training, a workshop sort of thing, and then you can pursue all this stuff accordingly. All right, then comes the similarities and differences. This time I tried my slide to be more according to commander description. After strength and weaknesses, jumping towards similarities and differences. Though my organization examples, they are not from SME. That's not a good point. Similarity, objective. Both financial and management accounting aims to provide useful information for the decision making. Financial accounting focuses on external stakeholders, while management accounting serves internal stakeholders. Still now, I hope the concept is clear to you people that which industry is suitable to which technique and when. Integrated system means we're combining both the financial and management together. For example, both systems at the H&M aim to support the strategic planning and operational efficiency. They're taking both the techniques together, financial and management. Data usage, both systems use financial data to analyze performance, but they apply it differently according to their timings, their decision-making powers, and everything. Financial accounting provides a historical view, that is, you have to add the past data into it, while the management accounting offers a forward-looking perspective, that is, you take the recommended steps to as a suggestion way forward. This is how you do the similarities of any command verb evaluate. Example, H&M's financial accounting might show past sales performance while the management accounting uses this data to forecast future sales. You are doing the work, like the output of the work is same, but the technique is using it differently. For the finance, that homework is different, and for the management, that homework is different. They're using this, it's according to their needs and requirements. Regulation and standards. Financial accounting allows and follows strict regulatory standards, that is IFRS and GAAP, whereas management accounting is more flexible and driven by the internal business needs according to managers, leads, and employees. For example, H&M's financial statement must comply with IFRS, but its internal budgeting processes can be customized to fit its specific requirement according to different countries. We have so many branches of H&M in many of the states of the world, but what happens? Their financial category, their statements, they're all same, but their management accounting system and how they work is different according to different states, culture, and timings. Differences, however, audience. Financial accounting is geared towards external stakeholders such as shareholders, creditors, and regulatory bodies, whereas the management accounting is entrusted and intended for the internal stakeholders, that is, managers and employees. For example, H&M's annual report is used by the investors, while its internal cost reports are used by department managers. Time orientation. Financial accounting is retrospective, that is, you have to give and take it out, focusing on the past performance, whereas the management, they work on the prospective, concentrating on the future planning and control. Simple. Whenever the word finance comes, you have to take the past with it. But when it comes management, you have to work on the legal present grounds so that you can work for the future. For example, financial reports at H&M cover the previous fiscal year. That is, every year is known as the fiscal year, which has a relation with the government taxes and subsidies, whereas the management reports might include future sales forecasts and budgets. We try, but let's see whether we are able to cross that boundary or not of that budget, of that limit of sales. Detail and scope. Financial accounting provides a broad overview, while management accounting of a broad overview means that is when we read the balance sheet, income statement, cash flow statement, equity statement, absorption costing, management costing, managerial costing, we get to where the business is standing. While management accounting offers detailed and specific information tailored to departmental needs, that is, according to department, we get to know in the management accounting system that which department is more competitive, which department needs more training and budgeting and everything. For example, H&M's financial statements give a summary of the overall financial health of the business, whereas management reports might detail the cost efficiency of individual stores. That is, every store is efficient at what space, whether they could use scarce resources more efficiently or they could use it abruptly because they don't have to pay the bills. They are only working there and getting salaried. Judge the evidence from different perspectives. First is from the efficiency factor. Strengths and weaknesses conclusion. Integration leads to streamlined processes, reducing time and error because obviously when you're efficient, things are quite smooth. Whereas high implementation and maintenance cost, it is expensive. Conclusion. While initial investments are significant, the long-term efficiency gains justify the integration for the H&M, leading to quicker and more accurate financial reporting. When you're working on minute things as well, ultimately you will get a nice output. Productivity perspective. Strength, weaknesses, conclusion. Enhanced collaboration and access to data improve employee productivity because we really want that they should work with less resources and producing up more. Weaknesses, initial training requirements can temporarily reduce the productivity and it is expensive too. Why? Because it takes time, it takes money, energy, all the things are together. The productivity benefits outweigh the initial training challenges, such as employees at H&M can work more efficiently and make data-driven decisions. That is why they do the trainings in these organizations. The reason is simple. They are doing the investment in them, which is used by them again in the future. Whatever the amount you are investing on them, it is doubled and tripled by them at the end of the time. Decision-making perspective, informed and strategic decision-making is facilitated by comprehensive and real-time data. You talk about the factual grounds. Weaknesses, potential data overload might complicate the decision-making processes. Sometimes it causes issues because we have so many opinions and thoughts. The availability of the integrated data supports better strategic planning and operational adjustments at H&M, despite the need for the robust data management practices. Conclusion, the integration of the financial and management accounting system offers the significant benefits for H&M, including improved efficiency, that is, when you work with the both systems in any of the organizations, specifically in SME, though it is not at the moment, we work on efficiency, enhanced productivity, and better decision-making capabilities. While there are challenges, problems, issues, such as implementation of the cost, it's expensive, complexity due to the challenges and rivals going on, and training requirements, the overall advantages outweigh the drawbacks. No matter what problems are, the plus points are quite high. By leveraging integrated system, H&M can streamline its processes, improve the collaboration, and make more informed decisions, strategic decisions, ultimately enhancing its competitive edge in the retail market. And what happens when you work on every ground in detail and depth? You're able to thrive in the industry more and you're able to produce innovative benchmarking product. That is called the competitive edge. You are having something unique with yourself.